Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to help you make some money. My job is not just to entertain, but to do some serious explaining here. So call me 1-800-743-CNBC or tweet me at Jim Cramer. It's starting up again. You know the litany. The market's too concentrated. Gains just in a handful of stocks. The whole thing's a house of a cards. So, sell. That was the story yesterday, and we heard it again this very morning, even as the averages opened lower and then rallied through the day. Dow ultimately slipping 25 points. S&P advanced 0.51%, but the Nasdaq ended up gaining 1.02%. Every time the experts start wringing their hands about concentration, the market's lack of breath, people sell the best stocks in the world. Look, I don't mean to cast aspersions on anyone who's trying to be prudent. There truly is a tremendous concentration of capital tied up in a handful of companies, but there's so much fear-mongering about this phenomenon that it's almost guaranteed to lead you in the wrong direction. 12 years ago, I helped coin the term called FANG, Facebook, Amazon, Netflix, Google, because these companies were changing the world. Their spectacular growth prospects made them incredible investments. Later on, I added Apple to make it FANG. Pretty soon, we had to throw in NVIDIA, Microsoft, too. You had to hold on to these for dear life. Their impact on our lives was palpable. And, of course, they're worth far more now than they were selling for 12 years ago. There was a concentration then. There's a concentration now. It's not fatal. It's lucrative. At the time, though, I took a lot of heat about my selection. People don't remember that. The FANG stocks were already up so much. Every single Jamoke and his brother knows these. I have a keen eye for the obvious. I didn't get my back slapped for coming up with something special. I was lambasted for pushing something pedestrian and potentially dangerous because they were all so expensive and concentrated. Ladies and gentlemen, we've now had more than 12 years of concentration. A dozen years. All along, it's been the same stocks. Netflix blossoming, one of the most respected, profitable entertainment companies of all time, maybe the most. Facebook became Meta. Why? Because of Instagram, because of WhatsApp, because of Reels, because of its dominance in advertising. Amazon's the largest retailer in the world. Its web division is doing amazing, phenomenal margins, amazing source of ad revenue, too. Now, though, let us talk about what really matters. What happened today? Google and Apple, that's what happened, because they are today's example of the dreaded, dangerous concentration. They are today's precipice, the two proverbial canaries singing their last in that darn coal mine. I get it. Believe me, I get it. I listened to the sirens and saw one of the canaries fighting for its life last year. The canary was Google. Now, Alphabet. After owning this stock for years, in 2024, I decided that its version of artificial intelligence, Gemini, was cannibalizing its regular search. The Donner Party. And more important, I was worried about the antitrust regulators going after them. Remember, big tech is one group that's hated by both Democrats and Republicans, both Biden and Trump. Sure enough, the Justice Department, in a suit brought during the Trump administration, succeeded in convincing a federal court judge, Amit Mehta, that's the first Trump, that last year, to make it so that they ruled that Alphabet violated Section 2 of the Sherman Antitrust Act. Alphabet, Meta, the judge said, was a monopolist. You can't be a monopolist. It's illegal. I thought for a moment that this could be good news, that Alphabet could be broken into different pieces, and that would amount to more than the sum of its parts kind of thing, you know. Figured, wow, Waymo this and YouTube that. But the analysts and prosecutors told me that Alphabet would have to divest this thing called Chrome for nothing, maybe even have to pay to make Chrome independent. No breakup like Standard Oil, which violated the Sherman Antitrust Act, and then ended up with 34 separate oil companies that made you a killing. If you bought the children of Standard Oil, it would end up being one of the greatest wealth creators of all time. But we were told this wouldn't happen here, that Alphabet was in for some real punishment, that you'd get hurt. I had a huge gain in Alphabet for the Travel Trust. Now it was in jeopardy. It was supposed to be a death sentence for Alphabet, and I wasn't going to an electric chair with this one, so we sold it for the trust. In retrospect, I was a fool. The concentration argument, as I've said, was a total canard. A moronic Jeremiah ginned up by people who never owned a stock or aren't allowed to own a stock or think they know something, but they're a part of the know-nothing party. And the government, with its Kathy Bates goal of hobbling Alphabet, played by James Caan, did the sledgehammer cut it off at its ankles? Nope. You know what happened? The court yesterday basically took back last year's harsh ruling. It was a do-over. There's no monopoly here at all. Instead, there's Anthropic, DeepSeek, there's Meta, there's Microsoft, there's Open, there's AI, there's Perplexity, there's Grok, there's Donner, there's Blitzen. Competitors that have become so powerful that since the case was heard, that there's no harm here. In the end, I listened to the sirens of negativity and I left the stock, but nothing really happened. I want my money back. But the scaremongers aren't going to give it to me. The ones who worried about concentration. I left 50 points on the table. Was I a moron, a chowderhead, a mountebank, perhaps deserving endless opprobrium for what I did here? No. You see, fortunately, I didn't worry completely about concentration. I had a credo about Apple, the other A added to make our acronym sound like a tortured sheep. Fine. Own it, don't trade it, I said. I needed it because in the trial we learned that Google paid more than $20 billion to exclusively preload its search engines into Apple devices. The sages who mete out fear at every turn, they told you that Judge Mehta would end that payment. That's right, he'd violate it, that big, beautiful payment. President didn't trademark that, I'm okay. Apple's numbers would be cut the moment we got the ruling, we were told. More catastrophe for the gang that couldn't shoot AI straight. It turns out, though, it was just the opposite. Google still has to pay Apple for that deal. Otherwise, the ruling would just be a handout to an aspiring monopolist. The judge actually said that. You know what that means? I want you to listen to this. It means that Apple no longer needs to pay one of these hyperscalers money or buy a bot like a Perplexity for billions of dollars. Instead, all these bot companies will now probably have to compete to pay Apple access to those more than $2 billion users. That's right. There isn't a clear winner right now in the chatbot space, but if you can pay Apple a fortune to make yours the default, someone's going to write that check. One of these companies is going to secure their Google-like status in AI, leaving behind a bunch of Bings who's spending billions for naught. Yesterday, Apple had no cards. Today, they have all the cards. Turns out Apple always had an AI strategy, pay to play. You pay them, not they pay you. So who's it going to be? I think it's probably Gemini. Here's the bottom line. Alphabet stock rallied 9% today and hit a new high. Apple stock jumped almost 4%. I caught the ladder for the trust, but I missed the 9% Alphabet gain. Why did I miss it? Because of the dangerous concentration that all these really smart people told me was going to be dangerous. When it wasn't dangerous at all, it was just lucrative. Let's go to Jay in Connecticut. Jay.
Hey, hi, Jim. This is Jay. I'm a long time listener. And I appreciate. I've never called you yet.
Thank you, Jay. Thanks for calling. Let's go to work. What do we got?
You got a great sense of humor. You know what you're doing. Okay, this real fast. This is what happened. On April 7th, I got scared because the White House was talking about all the tariffs. I had 50 shares in Netflix, so I sold it. I made a very big profit. I had it a long time. But people got into the habit, no matter what's happening in the economy, they love Netflix. So I'm wondering, here's the question. Should I buy the 50 shares back?
Okay, here's the issue. You did the right thing. Netflix went up a huge amount, and you took a profit, and we should never feel bad about profits. We should only feel bad about losses. But if the question is, do I like Netflix, the stock? You bet I do. All right, there will always be stories that will sway you out of stocks, including things like, ooh, the gains are so concentrated, the winners are so small. But you end up selling the best because of that moronic stuff. And we got to stop it. Maybe we can stop it together. Well, Mad Money tonight. Was it a miracle on 34th Street or some disciplined management that helped Macy's report a blowout quarter? It wasn't the Fed. I'm checking with the retailer. Then I'm checking in with Martin Marietta's top brass following the company's capital markets day. It wasn't the Fed. And investors are looking for clarity on what to do with Salesforce. And man, so am I. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.